Today, we are going to talk about something that is on a lot of people's minds: investing for retirement. It can feel daunting, especially if you're not sure where to start or how to make the best decisions for your future. But don't worry, I'm here to help. Let's break it down into some simple rules that can guide you whether you're just starting or you have been investing for years. The first key is not to lose ground to inflation. It's like a silent thief that erodes the value of your money over time. So make sure your retirement savings keep pace with inflation to avoid losing purchasing power. What seems like a healthy sum of money now will seem smaller and smaller over time. At a 3% annual inflation rate, something that costs $100 today would cost $181 in 20 years. The second key is to think about your time horizon. How long until you plan to use your retirement savings? The longer you have, the more you can afford to take risk for potentially higher returns. If you have a long time horizon, you may be able to invest a greater percentage of your money in something that could experience more dramatic price changes, but that might also have greater potential for long-term growth. Though past performance doesn't guarantee future results, the long-term direction of the stock market has historically been up despite its frequent and sometimes massive fluctuations. The third key is to focus on your risk tolerance. It's about how comfortable you are with the possibility of investment losses. Be honest with yourself about your emotional and financial ability to handle volatility. Many people think they're comfortable with risk, only to find out that when the market takes a turn for the worse, they're actually a lot less risk tolerant than they thought. Often that means they wind up selling in a panic when prices are lowest. Try to be honest with yourself about how you might react to a market downturn and plan accordingly. The fourth key is to integrate retirement with your other financial goals. Retirement planning isn't just about retirement. It's about your whole financial picture. Make sure you balance saving for retirement with other priorities like paying off debt or building an emergency fund. And finally, the fifth key: diversify your investments. Spread your money across different types of assets to reduce your overall risk. Remember, participating in a retirement plan is key. Keep it simple. Stick with it and let time be your ally. Retirement planning doesn't have to be overwhelming. By following these basic rules, you can make smarter choices and build a confident financial future. If you have any questions or need assistance, don't hesitate to reach out. Together, we can create a plan that is right for you.